Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week at everything you need to know in 90 seconds at 9 o'clock with news the Americans are trying to bully their trading partners. Talks between Canada and the United States to update the North American Free Trade Agreement soured sharply over the weekend after the US President said a pact would be on American terms, and Ottawa stood firm against signing just any deal. The key sticking point is whether Chapter 19 will survive. That is the section that resolves disputes over arbitrary tariff actions by the other party. The US wants the freedom to break the agreed terms without consequences. Canada is wary of giving the dominant party such leverage. It looks like there will be no agreement soon, and Canada may in fact get shut out. It all may depend on Mexico's attitude to the US threat of a Canada exclusion. And the US is threatening to pull out of the WTO, also over the restriction of having to go to arbitration for disputes. Emerging market troubles are spreading. The dramatic interest rate hike in Argentina on Friday failed to stop the rout of its currency. Turkey is facing a faster falling currency as well, and Indonesia and Brazil are watching their currencies fall to fresh lows. One consequence might be a rising demand for gold. But on Saturday, the IMF pledged full support for the Argentine government, and that has staunched their bleeding for now. And all this comes as the US and China seem to be making no progress at all in their trade dispute. India has reported its economy grew at the rate of 8.2% in the June quarter. That was up from 7.7% in the March quarter and well above analysts' expectations. And it is their ninth quarter of growth in a row. In China, their factory activity expanded faster in August and July, according to official data, and to be fair, it is matched by private surveys. But the absolute level of factory expansion is pretty modest. And the subcategory, new export orders, in the index reveals a fall, which may be telling. Their service sector expansion has also picked up, and that is growing at a much more healthy rate, however. And Chinese appliance manufacturer Haier has reported its first half profits up 10%, on a 24% rise in mainland Chinese sales and a 2% rise in international sales. Those international sales account for 40% of the revenue and include the US GE Appliances brand and New Zealand's Fisher & Paykel brands. New Australian energy policies promoting coal-fired power plants to get power prices down may well cause them real trouble with their free trade deal aspirations. The EU is saying the level of Aussie coal exports is a red line for us, and the proposed EU-Australian Free Trade Agreement may be stillborn. US Treasury 10-year yield is lower at 2.86%, but their 210 curve is back out to 23 basis points. The Aussie government 10-year is at 2.52%, that's down 3 basis points since Friday, and the Chinese government 10-year is at 3.60%, that's down 4 basis points, while the New Zealand government 10-year is at 2.56%, down another 2 basis points. The New Zealand swap rates are also lower, with the 2-year now at 1.98%. That's 5 basis points fall in the past week and a 16 basis points fall over the past month. Gold is marginally firmer from Friday and now just on $1,201 an ounce in New York. That's up $2. And US oil prices are marginally softer and now just under $70 a barrel. The Brent benchmark is now just over $77.50 a barrel. And the Kiwi dollar is starting the week at 66.2 US cents. On the cross rates, we're at 92 Aussie cents and softer at 57 euro cents. That puts the TWI at 70 and 50 points lower over the past week. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.